Hello and welcome to BloombergQuint. Just days ahead of another union budget, all attention is focused on the state of the economy, what kind of stance fiscal policy should take at this point, and also what priorities it should undertake at this stage. Joining us to talk about some of that and more, Dr. Pinaki Chakraborty, Director at NIPFP. Dr. Chakraborty, it's absolutely lovely to have you here on BloombergQuint, sir.
Thank you.
So I'll start by getting your prognosis of the economy, and that'll help us, delve a bit deeper. I think apart from the year-on-year growth rates, there is still some sort of underlying discomfort on the strength of the recovery and also the distribution of the recovery, whether it's between the formal sector and the informal sector, different income segments. How do you see the state of the economy right now?
The state of the economy is much better than what it was last year around this time. So that way, I think we are in a better place to deal with the fiscal challenges. Also, the way the GST revenue has increased in the last couple of months also give us some hope that fiscal situation of the current fiscal year would be better than what was predicted when this year's budget was presented. So that's the first thing. Second, I believe we need to also look at the GDP in nominal terms. So, and since budget is at current prices, all the budget numbers there. So that would have an impact on the overall fiscal numbers, because absolute numbers are also equally important. So these are two things. Other important aspect of fiscal management, I would think will have to be looked at in aggregate for the year 2021 before we talk about 2022 is the aggregate fiscal deficit of center and states. And there, if we look at the general government deficit, I think general government deficit at the state level, I think it is well below the budget estimates number I'm talking about, well below the target given by the Finance Commission, which is around 4.5, which is I think 4%. So that way, there are signs of fiscal consolidation, and if growth picks up in the medium term, then definitely we also need to have a fiscal consolidation strategy up and going.
So I'll just come to some of the individual elements in a bit, but on the headline, from a consolidation perspective, obviously, we've had, large expansion in the fiscal deficit, and the government has laid down a medium-term path going towards 4.5%. I think the debate for next year, sir, is what is an appropriate amount of fiscal consolidation, given that the economy still perhaps needs some fiscal support. How do you think the path should be graded? The path that was presented last year, do you think that's the appropriate path to continue with, or do you think there's reason to veer away from
it? Before I answer that question, I think I'll just make one point. Here, we need to recognize the fact that you are talking about bringing down the debt to GDP ratio, general government debt to GDP ratio.
Yes.
To 60% of GDP by 2022-23. And today, if we are talking about post-pandemic debt to GDP ratio, if you look at the number given by the Finance Commission, look at the state number, we are talking about around 90%, 85 to 90% of GDP ratio. So it's not a small number. Second, and it's a huge increase. Secondly, if we are talking about reducing the fiscal deficit, I think fiscal deficit in the medium term will have to reduce. But specific number for this year, I don't want to guess. But I think it is on a path of decline, and that should continue. I think that should indicate that there is a medium-term fiscal consolidation plan in place, instead of focusing too much on a specific number.
No, I understand that. I think I was more sort of, like you said, the debt to GDP, bringing it down, there are two elements to it. Everybody has pointed out that perhaps ensuring stronger nominal GDP growth is equally important right now, alongside, some sort of steady and staggered consolidation. From that viewpoint, given that the economy is where it is, you do see the need for fiscal policy to remain supportive, sir?
Yeah, fiscal policy has to remain supportive. There cannot be, a situation where fiscal policy cannot be supportive in a normal situation, and it is an extraordinary situation. So fiscal policy has to be supportive, but the room for extraordinary fiscal expansion is also not there. I think that part will have to be recognized. So if we are talking about 90% debt to GDP ratio just of the government, and then we have issues related to power sector, and so general government debt plus debt which is public sector debt, so will be much higher. So yes, fiscal support will have to continue, but if we say that we can have a very major kind fiscal expansion, I think that's not possible. That is one. Second point, I think that is where the reprioritization also becomes very important, where we should spend and where we should not be spending. And if we look at the budgets of the center and the states together, you do see that kind of reprioritization happening from the 21-22 budget numbers. So I think that has to be, that has to go on, yet supporting where it is most needed.
You're referring, sir, to the shift towards Capex, at least in the central government budget. You would suspect that continuing with that push is important right now, given that private investment still may be some time away?
Yeah, Capex is certainly a very important component of growth stimulus, but distribution of Capex is also equally important. And there again, we'll talk about the general government Capex. And if we talk about general government Capex, 2/3 of the Capex is at the state level. And now if we look at 20 and 22 budget estimates of states, 13 states have reported revenue deficit, which is a large number. Pre-pandemic, this number was less than 7 or 8, if I remember correctly. So there is a downside fiscal risk when 2/3 of the capital expenditure is at the state level, and states have shown, large number of states have shown revenue deficit. I think it is very important that reprioritization happen at the aggregate level as well as at the individual state level. And center support for capital expenditure, as we have seen in the last budget, and given that revenues have improved and revenue deficit will be much lower than what it was last year, so that it should automatically increase space for Capex at the central level.
So I'll come to states in a minute, but like you said, prioritization at a fiscal level is important, even at the central budget level. I think there is a little bit of concern right now that you do need to spend more on some of the social support, schemes. In particular, there has been, much angst about not enough budgeting for, say, Manrega, etc. Without getting into numbers, it's a fine balance within restricted resources between Capex and the need for some of these social support measures at this point in time.
I think there are 3 categories of expenditure in the budget that becomes critically important given the pandemic. I think one is life, so where you need to spend more on health, more on vaccination, etc. Of course, vaccination has been the way vaccination drive has gone on, and the kind of progress that we have made, it's very significant, and I think that's also a very big stimulus to the economy. It's a direct stimulus. So that kind of reprioritization is already happening. Now, second component of this reprioritization is livelihood. So livelihood, that means redistributive expenditure, which directly affects, household budget. So in that case, MG and REGA comes, and there are a lot of, social protection expenditure, which are there at the central level as well as at the state level. So, but in that context, if we look at the general government view, I think around 80% of that expenditure is at the state level, redistributed, given the constitutional assignment of functions. So it's given. So I think central support for big ticket CSS has to be there in terms of what is required for life. So health sector expenditure and what is required for livelihood side, like food and the MG and REGA right to employment. But to say that we can have a very high revenue expenditure without reprioritizing it. And we cannot have a business as usual kind of a growth in revenue expenditure. And that is where the reprioritization becomes critically important, because we need to also consolidate in the medium term.
No, absolutely. How do you then see this debate that we need to move towards an urban, sort of employment guarantee scheme, urban Manrega as it's being broadly called? How do you see that debate, sir?
No, it's an interesting debate, but there are cost implications, and we need to examine this in detail. See, even in case of MGNREGA, it was initially introduced in 100 districts, then 200 districts, and then during the global financial crisis, it was expanded to the entire country. So in case of MGNREGA, if we are talking about urban employment guarantee scheme, we need to examine this in detail. Secondly, the pattern of migration is very different across states. So if we are talking about urban employment guarantee program, the kind of migration happens to the big cities and the kind of migration that happens to smaller towns are very different. What that space would be, and how do you then estimate its fiscal implication? These things will have to be studied. But pan-India urban employment guarantee program, the fiscal cost will be very, very significant. So we need to examine this in detail.
So you've referred a couple of times to states, and I think the data available so far suggests that states are perhaps not spending at a pace that one would have expected. The center has tried to upfront this year some of the transfers to states, perhaps to give them certainty on the revenue front and then induce them into spending. But what's your sense of what is happening at the state level and what is keeping spending back? Is it uncertainty, or is it just the capacity to spend at this stage?
See, we need to look at state-specific data for this. The aggregate, yes, there is kind of holding back on some of the spending, and cash surplus also has increased in some of the states. I think it's a kind of precautionary measure. Why do I say it as a precautionary measure? Because from next year, I think they are going back to the 3% target, because that was what Finance Commission had suggested. So this happened earlier also. So if you look at 2010-11, there was huge cash surplus at the state level. So they were borrowing but not spending, and keeping in the treasury bill. So that is something which also has a fiscal cost. Holding cash reserves in large amount has huge fiscal cost, because we are borrowing at it. It's not free. And this is not the case in all the states. Wherever this is not happening, I think that is why in the beginning I mentioned that states were allowed to borrow up to 4.5, but if you look at the budget, it is around 3. It's less than 4. So that is where I think state could have expanded, and if they had expanded on the capital side, that itself would have acted as a fiscal stimulus. So the point which I'm trying to say is that given the overall fiscal space, there is still scope for higher spending, rather than saying that you need to expand heavily to support growth. I think the overall framework of fiscal architecture and the kind of fiscal space that was available, that is available for 2021-22 was not fully utilized if you look at the general government deficit, particularly at the state.
Is there then an argument to give a bit more leeway to the states in the next year, or is that not possible given the Finance Commission's recommendations?
Well, I don't know, but given that it's the budget estimates numbers are below 4.5, the likelihood of continuing with a higher fiscal deficit number my guess would be difficult.
Understood. So I just want to switch focus to the revenue side as well. This year, has been surprisingly good on the tax front. Some of it comes from the fact that nominal GDP growth has been stronger than what was anticipated in the budget documents. But also there is higher tax buoyancy according to some economists. What's your sense of what this is about? Is this about the formalization story that a lot of people are talking about, sir, to your mind?
No, I don't want to guess. I think there are multiple factors that worked. I think one is the GDP growth itself has picked up, and nominal GDP growth we are talking about 15 plus. Budget talked about 14.5. So I think we are talking about 16, 17 now with an inflation of 6 plus. So 6, 7. So I think that certainly has played a role. Secondly, I think a lot of issues in technology in tax administration also was updated, upgraded, and that also improved GST collection, which is not adequately recognized in the debate. So that is the second part. And third, I think going forward, we also need to understand that the compensation is going to go. GST compensation. So I think if the compensation is after 5 years, I think it will immediately simplify the you don't have that space. Of course, it will continue because some of the borrowings that needs to be serviced because last year it was given through borrowing to the state. So, but that can also reduce the overall tax burden.
Okay. But that debate, sir, remains to be resolved, although not a budget item. But whether to extend the period of compensation is a decision we'll have to take.
Yes.
Perhaps.
Yeah, I think it is important to recognize conceptually that we need to delink compensation from COVID-induced fiscal shock. Okay. So, it's just that both the things happened together. So compensation was for 5 years, and it's a cost of tax harmonization borne nationally by the central government. So conceptually speaking, I am no one to comment on whether it should continue or not continue. But if you're talking about there's a cost of tax harmonization, and that is where this cost has to be nationally borne. And if Constitution says that you do it for 5 years, and that has already been done, and then if we link it with COVID, I think we are mixing up two issues. So COVID, nobody is saying that COVID hasn't had an impact on the fisc. COVID definitely resulted in a huge revenue reduction at the central level and at the state level. And this impact across state is asymmetric. So if this impact is asymmetric, and then you say that to resolve this resolve this COVID crisis, the fiscal crisis arising out of COVID, we should give an uniform 14% compensation for another 2 years. I think it's conceptually flawed. So I think it's important to recognize that yes, COVID has impact, and that information is already there. So it is important to understand what is the fiscal impact of COVID across states, and if required, appropriate fiscal support should be given by the center, given that center has constitutionally more revenue raising power and state has got more expenditure responsibilities. But to say that since there is a COVID and it has impacted revenue, so GST compensation should continue for another 2 years, that argument, to my view, is very weak.
Understood. But sir, from conceptually to practically, is it that easy to disaggregate the impact of COVID?
No, states, yeah, but states do not only earn revenues from GST.
Yes. And
we are completely ignoring the expenditure side. So the kind of fiscal intervention state A has to do may be very different from state B, because the impact of COVID is also asymmetric. Now, if we just say that GST's 14% compensation is important for us to tide over this crisis, I think we are just extending the cost of tax harmonization by another 2 years. So I would always prefer an option where we can study this in detail and see what are the fiscal needs arising due to COVID and think of supporting that rather than saying ki 14% compensation will be will be something that should continue to deal with the COVID crisis.
Understood your point there. So one other issue, which is again not a central budget item, but in the context of GST, I think the debate also about the revenue neutral rate being well below what had been thought of, and hence an adjustment required in the tax slabs. That is also a debate that perhaps we now need to have and move in a certain direction. So although there is the question that the economy is the state of the economy perhaps is not ideal for a raising of sort of tax rates at this stage.
Yeah, but then what are we doing? So if we say that we are not able to raise the tax rate, so there will be a revenue loss. So there's the compensation should continue, and there will be a cess which will support this compensation. So we are not reducing the tax rate. So if we are giving a grant, that's on the expenditure side of the budget.
Yes.
But we are simplifying the GST. But when we say no, we should get the support from the revenue side of the budget, then there should be discussion on revenue neutrality. What should that tax rate be? Rather than a numerically fixed compensation limit, which is very high to my view. 14% is a very high rate of compensation.
Okay, understood, sir. So just coming back to some of the budget items, we talked about the debt to GDP, the high level of debt to GDP. We talked about fiscal consolidation. But if one sort of strips down what the implications of a high debt to GDP, from a more market perspective, are, we had now going to have a period where market borrowings will remain very high, and the interest component on the government's budget is also going to be high. But I guess there is no way around that. The implications of that in terms of higher interest rates may be unavoidable, perhaps in the next year.
Yes, I was looking at the RBI study on state finances, and the interest payment as a percentage of revenue received has increased sharply.
Yes, sir.
And this is reducing the space for primary revenue expenditure, non-interest revenue expenditure. And then 13 states have reported revenue deficit in their budgets in 21-22. So this can have serious implications for capital expenditure. Similarly, in the case of center also, more than 3% of GDP is the fiscal deficit, the interest payment to GDP ratio, so it's very high. And then we are talking about centrally sponsored scheme, which is around central sector and centrally sponsored around 2% of GDP. So that is your revenue deficit. So essentially we are borrowing and borrowing. And a large part of it, because we have revenue deficit, is also going for the interest payment. So it's important that over time, the debt management is such that effective cost of borrowing goes down. I think, and that becomes very important. And that is where fiscal consolidation is very important, because if your current borrowing goes down, naturally the pressure on interest rate also goes down. But if we say that we need to also have a higher fiscal expansion, then that pressure remains. So this is a complex problem. There is no an immediate solution to this, because there is a pressure on government to borrow, and I think that is where sticking to a fiscal target, which is which is towards fiscal consolidation, I think it's extremely important for medium-term debt sustainability and enhancing the space for primary revenue expenditure.
Absolutely. Also, from a financial market perspective, sticking to a path, when the tide turns, perhaps will be important. So one slightly longer term question. I mean, the roadmap to 3% is forgotten now, so as things stand.
No, I think 3% is still valid. That's, you have to look at it from the, in my view, I think from the Finance Commission's framework of fiscal consolidation, where they had suggested a different path which was higher than 3 is thick, and that was in the middle of COVID last year. But I think going back to 3 will be important because we already have a debt to GDP ratio which is above 85, around 90. So 3 is very important. But I agree with the view that sustainable deficit can be different than 3. But given that we are now growing at nominal term around 15 plus, I think 3 is doable. May not be tomorrow, but certainly in the medium term.
So 2 last questions. One again, slightly medium term related to the Finance Commission. I think because the Finance Commission report came in the middle of COVID, some of these conceptual issues perhaps did not get enough attention. One of them was a familiar suggestion of a fiscal council, sir. Any hope, any sort of thought on whether that's the direction we want to move in now once the COVID dust settles, sir?
Well, it's very difficult to say. I think Fiscal Council has been suggested by successive Finance Commission. I think FRBM Review Committee also had talked about Fiscal Council. I think CAG does audit of FRBM compliance. Various states have their compliance mechanism evaluation. NIPFP does for some of the states. But I think there are 2 issues. And it's very complex. When you talk about Fiscal Council, we are talking about ex-ante fiscal evaluation. So we are saying that as soon as the budget is presented, somebody should say whether it is credible or not. And when an audit is done, whether the government complied with the FRBM, that's an ex-post evaluation. I think complexity lies in these 2 different aspects of looking at budget, whether we should have an ex-ante evaluation and ex-post evaluation. Unless we settle on that whether we should be having an ex-ante also along with the ex-post, I think this debate will continue. But so far as direction of fiscal consolidation is concerned, at the aggregate general government level, except for a short span of time after global financial crisis 2008-9, I think India's FRBM compliance story is a story of success. Whether it is particularly for the states, center, of course, it was high, and then it started going down, and then again it started increasing because of various other, because of COVID. But I think overall story, even without a fiscal council, is something which is an aggregate number. It's not that bad. So I don't think we are doing very badly because we don't have a fiscal council. But I think it is extremely important to have more informed debate, informed discussion on the fiscal issues, both ex-ante and ex-post.
Understood. Dr. Chakraborty, last question to you. I've put a lot of specific questions. Let me just ask you a broader, sort of question from your perspective as we go into a new fiscal year. What are some of the risks, red flags we need to be aware of, and equally, what are some of the policy priorities, according to you?
Well, I think fiscal risk, as I see in the medium term, is consolidation of debt and deficit. I think that has to be a priority, and I think there's a lot of discussions about don't give up, fiscal support to support growth in order to because you need to support growth. I think there is no disagreement there. You need to support growth, but yet you need to have fiscal consolidation. I think that towards that we should go. I am not guessing want to guess the numerical number of fiscal deficit. That's not very important. Second, I think in terms of general government fiscal issues, I think power sector remains a major fiscal risk because post Uday, if we look at the numbers, I think it started improving again. Now we see that there are states where it's very high. So that's a very big fiscal risk and can have an impact on the state budget. And if again the state debt goes up, again it has got an impact on the interest liability. That's the second fiscal risk I think. Third fiscal risk, I would say, in terms of a longer term perspective, is this pressure of globally there is a pressure. I think it's not only in India. Globally there is a There is this argument, the fisc really doesn't matter. But if we are talking about an economy which will be growing at the rate of, say, 7+ in the next 5 years, and at that point in time, if we have a very high interest rate, I think that can have a serious impact on growth. I think that we cannot ignore. So that is where we need to have a long-term fiscal consolidation vision. I'm not saying that it should be 3 next year, but certainly we should move towards that.
All right, I'll leave it at that, sir. Thank you so much. Very kind of you to share your thoughts with us here on BloombergQuint.
Thank you for the invitation. Thank you.
Thanks for watching Bloomberg.